Bitcoin is the most important intelligence test happening in the world today, and the good news is you don't have to be a genius to pass. It just takes a little bit of attention, effort, and willingness to think critically for yourself. And part of what we're trying to do with the channel is create informational, educational Bitcoin content that is simple to understand and accessible for everybody. This week, we are joined by Luke Mikic, who is a YouTube content creator and Bitcoin educator, world traveler, and someone who has a great perspective that I love, that is super bullish on Bitcoin. Something that goes on a lot in the Bitcoin space is a temptation to be undershooting how big this idea is. Luke is here today to share some of his ideas about why the Bitcoin price can be a much higher number than most people think, but what that actually means for the underlying assumptions around adoption in terms of how many people are going to use it, own it, and why we should be thinking about Bitcoin differently than, in these sort of smaller use case things about being a medium of exchange, a money that we use day to day. Bitcoin is something entirely different, and that is what our conversation is all about. I'm Scott Dedels. I'm the CEO and founder of Block Rewards. Part of our mission in bringing Bitcoin to the workplace is helping people understand how it will help them. So if you're interested to learn something about why you are not bullish enough on how big of an idea Bitcoin is, stick around. Welcome to another episode of the Block Reward podcast. Very excited this week for a very bullish conversation with Luke Mikic, and welcome to the show.
Thanks for having me, dude. I'm pumped. I'm bullish. You pronounced my name correctly, which is rare. So thank you for that. I'm pretty excited to get into it.
So we met recently at the Bitcoin Atlantis conference in Madeira, and I want to just tell a short story before we get started. I have had lots of different topics on our weekly guests who join us. And we did do an episode about a month ago with Sam Callahan from Swan talking about why we should be bullish on Bitcoin in 2024. But when I met you in Madeira, we had a quick conversation about your sort of interests and perspectives. And it dawned on me right away that I haven't yet done an episode to properly do justice to how bullish I am on Bitcoin in general. And that is going to be the subject of our conversation today. You've got some very big ideas, which I'm super pumped to share with our listeners. So right on to that. Maybe before we get started, can you just tell us a little bit about yourself for our listeners who aren't familiar with you?
Yeah, so the super high level is a 27-year-old Australian gringo with a crazy haircut, and I talk shit online. That is essentially the high level version of me. I escaped Australia maybe 3 years ago now, 2.5 years ago, in 2022, on one of the first international flights out of the country. And since then, I've just been working full-time in Bitcoin. I've been working full-time in Bitcoin since maybe 2021, and I absolutely love it. It's a dream job for me. I've met some amazing people, and I get to try to help educate people about something that I think is the most interesting and revolutionary thing in the world today.
Yeah, and I couldn't agree more. We share this passion for Bitcoin education. I want to ask you the question I ask everybody to start our conversation every week, and that is, what is Bitcoin?
At a high level, Bitcoin is the greatest invention in human history. It's so much more than digital money. It's so much more than, it's the first money in human history that can't be controlled by anyone, can't be printed, and can't be controlled or shut down. Not even a nuclear bomb can, stop Bitcoin. So I think that's very interesting. We've never created anything scarce online before Bitcoin. So I think it's not only a monetary revolution and marvel, but it is also a computer science revolution and marvel. It is the greatest thing that humans have ever discovered. And I think I have a few ventures with Alex Svetsky, and he has a thesis that, there's going to be an era of human civilization that we call BB, and there's going to be another era of human civilization that we call AB. So Alex is referring to a time before Bitcoin, BB, and a time after Bitcoin, AB. And that's honestly, I think that's on the money. I think Alex nailed it with that framing. And I think, that's how we should be thinking about Bitcoin. It has absolutely transformed our civilization.
It's amazing to me how big the gulf exists intellectually from people who think Bitcoin might be silly because of the name or because it's internet money, it doesn't come from a bank, all these other things, to on the other end of the spectrum, people who kind of live it and breathe it and really understand it and everybody who's somewhere in between. And I couldn't agree with you more. I say to people all the time that I think Bitcoin is a much more significant invention than the internet. And for people who fully understand what the internet is and don't understand really what Bitcoin is, the statement itself seems absurd. But part of I think this is where, as we get into why the Bitcoin price or why you'd be bullish on it, a big part of this grounding ideas rely on understanding how big of a use case or of an innovation this thing actually is.
Yeah, it's massive. And I think people are going to hear a lot of the things that I say in this podcast and going to think I'm absolutely crazy. Even the before Bitcoin and after Bitcoin statement, some people could think that's absolutely wild. And I'm sure I'm going to try to back that up throughout our conversation. But I think that, it's very difficult to truly grasp what Bitcoin is. I've been looking at this thing for at least 12 to 14 hours a day since I was 19, and I still don't understand Bitcoin. There's so many aspects about Bitcoin that I have absolutely no clue about. I'm not a technical expert, but I just think, Bitcoin is an endless rabbit hole. And I think most people haven't really recognized how much our world's transformed since the internet was birthed, 20, 30, 40 years ago. So I think we have a kind of recency bias, and a lot of people don't quite zoom out on a big picture and realize just how rapidly our world is being transformed as we enter this digital age. And literally, just 15 years ago, there was no social media. There was no ability for us to even have this video call only 15 years ago. We've been, running around chasing animals for the past 150,000 years, and it's only in the past 15 years. So what's that? 0.01% of kind of our existence as Homo sapiens that we've actually had the ability to talk to other Homo sapiens outside of our physical locality. That's just wild. And most people still haven't really grasped how significant this thing called video calls are right now that we're using. And I think, I hope today's discussion is going to be one of those really big picture kind of conversations where we do zoom out and have a look at just how transformative Bitcoin and the internet combined is going to be for our civilization on the kind of, in the big picture sense of things, not, these day-to-day, flows and these day-to-day discussions that are commonly referred to in the Bitcoin space. I think we all get, kind of distracted by the short-term movement of the Bitcoin price. But when you zoom out, I think whether you buy Bitcoin at $60,000, $6,000 or $600,000, I think any of those prices are going to look absolutely irrelevant in 20 to 30 years' time.
Yeah, I tweeted this out the other day. There's this famous Michael Saylor. I love Michael Saylor, and we're going to talk about Saylor later. One of Saylor's famous quotes is, "I'll be buying the top forever." And it occurred to me, there was a Bitcoin price drop over the last couple of days, and everyone's always worried about how much further down it's going to go. And it occurred to me that we should be saying we'll be buying the bottom forever. Because if this thing has no top, then whatever the price you're getting in now is definitely going to be lower than it's going to be one day. So we do so much worrying about what the price is going to do in the short term, like you said, and it's such a distraction. And the other thing I wanted to say on commenting on your point there is, as far as Bitcoin being a bottomless rabbit hole, it's amazing how people who know nothing about it are willing to make a definitive judgment about what it is. And on the other side, someone like yourself who's dedicated countless hours to studying it, it's the more you learn about it, the less you realize we understand it. And that's not just true that's true of the people who are the most prominent people in Bitcoin who understand it the best. It's this thing is such a big idea that it is really hard to envision how much change it's going to enact today because we are still so early.
Yeah, that's a brilliant point. I think it's the Dunning-Kruger effect on steroids, so to say. And I think it's fascinating that people do have such strong opinions on Bitcoin. I don't know. Maybe it's an early Bitcoiner thing, but I see a lot of very level heads of people who adopted Bitcoin very early. They don't typically have very strong opinions on topics outside of their discipline of study. Obviously Preston Pysh is another one of those kind of guys who, admits, hey, I don't have any knowledge on XYZ. I don't have a strong opinion on it. I think a lot of people, I don't know I don't know how to categorize these people, but maybe people in mainstream media and mainstream press and mainstream educational circles. I'm not sure what it is. Maybe it's the classic bell curve meme, the 100 to 120 IQers. They're kind of the ones with the strongest opinions on everything. They think they're experts. But yeah, I think it's the Dunning-Kruger effect. And I think that's the beautiful thing about Bitcoin. It is this never-ending rabbit hole. I really like the fact that it's this never-ending rabbit hole because there's all these new ways to analogize what Bitcoin is. And you just created another one a second ago. You're going to be buying the bottom forever. And I think that's a brilliant way to frame it because I think Bitcoin is literally going up forever. It's Michael Saylor and Seps and Mao. They weren't playing around when they said this on national news and national television. Like, if you truly understand Bitcoin, you understand that it is going up forever. Like even the people who think it's just, digital gold, I think that's one of the biggest memes in the Bitcoin space where many people assume that Bitcoin is going to reach this kind of stable price in the future. And it's just, I don't think that's going to happen. What do you think?
Yeah. I mean, because I think about one of the more recent, a lot of people right now in the Bitcoin space are paying attention to Fred Krueger, and Fred had a rant one day about how once Bitcoin gets to $1 million, the party's over. That's it. And it's like, I don't know how anybody who thinks they could understand this thing could also hold that opinion because they're just totally incongruent statements. You can't believe both those things. So, I think that the bigger it gets, so as it gets bigger, the risk reward proposition of Bitcoin becomes more favorable. So, and as we're going to talk about the upside, part of the confusion I think is in thinking of Bitcoin as an asset class. So people love to compare Bitcoin to gold, for example, and compare how big Bitcoin is compared to gold, and think of Bitcoin like it's an asset. So then if they're done thinking about how it compares to gold, then they want to think about how it compares to real estate or to the stock market or to all of the debt in the world. And personally, I think that Bitcoin is a value system. It's actually an entirely different system for measuring everything. So I don't think it's an asset class. It's a system that is actually reprogramming the way that we used to value things. So it's not coming for any one asset, it's coming for value. And so if we measure all value in that thing, then that would mean that the price of a Bitcoin is the value of everything divided by 21 million, which is a Knut Swanholm idea. And we had Knut on the show back in November, if you're interested and you missed that one.
Yeah, Knut is one who is appropriately bullish. I met Knut here in Madeira, the same place that I met you recently, Scott, and he is certainly one of the few Bitcoiners who is appropriately bullish. And I also think this kind of idea of, I'm going to try to attack the idea and not the person. But I think the idea of assuming that Bitcoin's going to just, once it hits $1 million, the party's over. I think that's a wrong idea. I think it's the wrong framing. And I think that kind of idea is potentially being propagated by people who just haven't done the work on Bitcoin. These kind of people, they get very loud in the beginnings of the bull market and they say, look, I've been here for a lot of time. But if you look at their history, they haven't been here for a lot of time. They're not here for a lot of time. And these kind of very loud people who pop up in a bull markets, they weren't here in the bear markets. They haven't done the work. They're just here to build a follower base very quickly in the bull market. And then they're going to, when there's another opportunity, they're going to go and create another company in a more sexy opportunity, the next bear market. And it tells. I think CK Snarks put it really nicely when he kind of says, look, it's more likely that Bitcoin goes to zero or it goes to, hundreds of millions of dollars per coin, than it is that Bitcoin becomes just another asset, like a digital gold. And, once it gets to $1 million, the party's over. I also, like CK, someone who is appropriately bullish enough on Bitcoin, think that idea is absurd. And it's purely because they don't understand that concept that you just raised. Bitcoin is a new system that is a way to actually measure value in the digital world. It is a complete transformation. We are going from the analog age to the digital age. We are in that transition of digitizing everything. We've begun the process of digitizing our information, and all information is going to become digitized, the very large majority. The same is going to happen with our value in the world. Today, we got $900 trillion floating around looking for the superior store of value. I don't think it's going to take many more decades for the capital allocators who control the majority of that $900 trillion to really start to figure out that there is only one superior asset, and that is Bitcoin. And we're already watching researchers and analysts within the world's largest asset manager, BlackRock, come to this conclusion. BlackRock wrote a paper internally for their clients in 2022, and they said, based upon the past 10 years of data, the optimal allocation that you could have made for your portfolio was 85% Bitcoin, 9% stocks, 6% bonds. This was written by an analyst within BlackRock in 2022, a year before BlackRock filed for a Bitcoin ETF in August-ish 2023. So I think that is how we should be looking at Bitcoin amongst the other assets in the world. We got $900 trillion of assets. I think that BlackRock analyst was actually on the money. I'd actually think that maybe he read an article that I wrote in 2021 where I make a very similar conclusion about what is the optimal asset allocation. And I think that when you have people coming to this realization who control a lot of the money, the rest of the money who is less intelligent and hasn't done the work is going to have to naturally copy what these people at BlackRock are beginning to figure out. Now, again, I'm not a BlackRock sip. I don't think you should buy their ETF. I question everything BlackRock does. I've made many videos, looking at the ways that BlackRock could be maybe moving towards a potential, attack on Bitcoin. But again, I think that, I think that it's significant that the world's largest asset manager is now beginning to run the numbers. And right now, I think they hold over $10 billion worth of Bitcoin, which is absolutely incredible. And they've already accumulated 1% of the total Bitcoin supply in 45 days of ETF trading. That's absurd. And people, again, like recency bias, I don't think they're watching this kind of exponential curve that we are on in adoption of Bitcoin, the monetary asset. I think everybody's too fixated with adoption of Bitcoin, the medium of exchange asset. And they're too fixated on, thinking these exponential numbers of like $64 million Bitcoin, they're absurd. Bitcoin's never going to go to $64 million because every time I interact with my normie friends in my physical locality, they don't understand Bitcoin. So there's no way Bitcoin can reach these price levels. And I think these kind of people, they're not looking at what's happening with adoption of Bitcoin, the monetary asset. I think that's far more important. We'll probably get into that rabbit hole a little bit later. I'll pause for a second. I just said a lot and I forgot the original question. So I'll let you back in, Scott.
Yeah, I don't even remember it. But, you really got me thinking there about how it's also crazy to me that you have the head of BlackRock, Larry Fink, on mainstream news, and the pundits are questioning his own shifting narrative around Bitcoin. So he himself now is talking openly about Bitcoin as a store of value. Bitcoin is bigger than any government. Like, he has said some really strong statements about Bitcoin in 2024. And then you still have the analysts who are hearing that, kind of taking it with a little bit of like skepticism, or, who knows what they're trying to portray on TV. But it's a funny thing. Like, this guy's literally running the largest asset manager in the world. So you might want to just take what he's saying at face value, or you're going to just end up doing what he says you should do later on when this is your chance, basically.
It's wild watching Big Larry Fink go into there and actually defend Bitcoin. Is in many of these interviews, some of the, people asking the questions on mainstream media or CNBC, they're like, but Larry, Bitcoin can't be that big. It's so volatile, Larry. It can't be all of the things that you're saying. And Larry goes in there and he's like, no. Bitcoin is bigger than any government. It is digitizing gold. It's pretty crazy to see him really kind of defend Bitcoin on mainstream media. It kind of, maybe Larry gets it. Again, I'm skeptical. I don't know what he knows. I don't know whether he's just grifting or just trying to make money. I have no idea. But, maybe he gets Bitcoin. Maybe he's been orange pilled.
I think he gets it. If I had to guess privately, I always think that, like, even people like Jamie Dimon, who is the head of JP Morgan Bank, and these people who are famously don't get it. I don't like to give anyone, the benefit of, like, I think it's too easy to assume people are stupid. They're not stupid. You're guaranteed. The people running the biggest financial institutions in the world are not stupid. I do know from talking to some that, it is very true that there are lots of big sort of C-suite traditional financial services executives that absolutely don't get it. But Larry Fink, I don't think that's true. I think he knows more than he says.
Yeah, I think you're true there. I think a lot of, these financial analysts have absolutely no clue. They haven't done the work. They're benefiting from a system that pays their wages. So they're not incentivized to think outside the box and think about a system that challenges that very system that pays their paychecks. But I think, if I had to guess, again, I'm very skeptical of Larry. I'm anti everything he's been about in the past. I hate ESG. But that whole narrative was an absolute scam. I have seen the connections that he has with many, let's say, 3-letter agencies and non-government organizations around the world who I am very critical of. And like the World Economic Forum, just going to call him out. Like he's a board of director on the WEF. So again, like I'm very cautious of Larry, but I don't know, maybe he gets Bitcoin. It's also interesting that he's kind of made this pivot into Bitcoin at the same time. The World Economic Forum is now talking about how Bitcoin mining is green in Africa and it's good for the chocolate factories in some random obscure country in Africa. It's very interesting. But this is, again, everybody's going to have to bend the knee to Bitcoin and make that famous Bitcoin pivot that we're watching the world's largest asset manager make.
Yeah, I think maybe as a final thought on that one, it's like, just because he might have potentially understood Bitcoin doesn't also necessarily mean that he's become an altruist. And those two things could also be true, both be true at the same time. So I'm with you on there with the general level of a healthy degree of skepticism with BlackRock. I love the way you phrase this, the idea of digitizing all the value. And one of your most bullish statements is $64 million per Bitcoin by 2030?
Yeah, it's 2030.
2030. That's not that far away. That's... Why don't you walk me through the math on how you arrive at this number?
Before we do the math, I want to talk about the framework because the framework is going to make a little bit more sense to people before they hear the crazy moon math. So because the numbers have actually changed since I wrote that 2021 paper and they've gotten even more bullish because of the Bitcoin multiplier effect. But we'll start with the framework. So nobody can argue with the fact that technologies get adopted in exponential curves. Every technology that has been adopted by society is adopted in an exponential curve. So if Bitcoin is adopted by the majority of society, what does it look like? Well, I've ran the maths. And again, that's the only assumption that price tag per Bitcoin in today's dollars, so not hyperinflated dollars, rests upon. It rests upon the majority of society adopting Bitcoin. So I kind of, again, looked at history. How do technologies get adopted? Exponentially. And if you look at 3 of the bigger technologies that have been adopted by society, gives you a little bit of a framework to look at because I was interested. How is Bitcoin going to be adopted? What's the time span? What are we looking at? Well, if you look at the automobile, the smartphone, and the internet, all 3 of those technologies got adopted in a very, very interesting way. If you take an average of their adoption curves, most of them took about 10 years to go from 0% adoption to 10% adoption. And then it took them the same amount of time, so 10 years, to go from 10% adoption to 90% adoption. So in only 20 years, they were mass adopted by society. And after you hit an inflection point, at around 10 years in, adoption became exponential as the majority of society, the early majority and the late majority, adopted it very, very quickly. And now when you look at Bitcoin, right now, Bitcoin's 15 years old. And again, in this 2021 paper, I made the case that we had just hit the inflection point and Bitcoin is now in its second epoch of adoption. I've made the case on multiple occasions that 2020 was an inflection point, and I believe that adoption is beginning to go exponential. Now, why do I say that? Now, I believe that Bitcoin is a monetary technology. So the way we should be actually tracking its, quote unquote adoption is by looking at the people who control the large majority of this 900 trillion. What kind of adoption or what kind of allocation are they making to Bitcoin? So in this paper, I said before 2020, 99.999% of the big money was not interested in Bitcoin. It was this small, obscure, speculative asset that was just traded by retail. And when you look at the data, that is true. Before 2020, the amount of Bitcoin sitting on exchanges only grew. So when it grew from like 0 in 2009 to 3.1 million in 2020. But since 2020, we've watched something change. And for the first time in Bitcoin's life, over the past 4.5 years, coins have only left exchanges. So an absolute inflection point happened in 2020. And now we don't know who is pulling all that Bitcoin off exchanges, but all we do know is that 40% of all the available Bitcoin for sale on exchanges has disappeared in the past 4.5 years. So again, like when you pair that data with the other data of, okay, something's different with exchange balances, something is also different in the realm of hash rate. Typically in every single bear market, whenever the price of Bitcoin's gone down, the hash rate has also gone down. But then in this most recent 75% correction in 2022, the price of Bitcoin drew down 75%, but the hash rate has now strangely, for the first time ever, continued making new all-time highs in the bear market. And it's interesting because we continue to get bombarded with news of a new nation state adopting Bitcoin and mining Bitcoin every couple of months. So we have so many nation states like Oman, El Salvador, Saudi, the UAE, and the Kingdom of Bhutan. They've all invested more than $500 million into Bitcoin mining. And that's publicly. They're the nation states we know publicly that are mining Bitcoin. So again, and we obviously have like the first corporation also placing Bitcoin on its balance sheet as a treasury reserve asset in 2020. So this is Michael Saylor. So we have all of these data points that after 2020, something maybe has changed in the Bitcoin space. I mean, this is public data. This isn't speculation. Something has changed in Bitcoin post 2020. When you look at hash rate, and the amount of Bitcoin sitting on exchanges. So like my kind of mental operating model is, okay, how those prior technologies, after 10 years, adoption started to go exponential. So my kind of thesis is that, between 2009 and 2020, that was kind of era one for Bitcoin. And then if you extrapolate another 10 years or 11 years, takes you to 2030 or 2031. So I expect Bitcoin to be adopted by the majority of society by 2030 or 2031, based upon a lot of what we just discussed. I said a lot. I'm going to let you in, and maybe we can jump into the maths in a second of what it actually looks like that, Bitcoin gets adopted exponentially. But I think we are in that inflection point right now.
Hey, everybody. I'm thrilled to announce that Block Rewards has come on board as a sponsor for the 2024 Canadian Bitcoin Conference happening in Montreal, May 16th to the 18th. It's going to be a great event with an unreal lineup of speakers, and we couldn't be more excited about being involved. If you're thinking about going and you don't have your tickets yet, you get 10% off of your pass using the code BLOCK2024, and that's all capital letters. And you can get those tickets at CanadianBitcoinConf.com. Hope to see you there. You made a lot of great points there. In our sort of instant gratification society, I wonder sometimes if we expect instantaneous things to be literally instant. So because Bitcoin none of us woke up and the next morning Bitcoin was like 1 million or 10 million or some insane number. Like something going from 3,000 to 70,000 in 4 years, and the size that it's grown in terms of like total market cap, that is exponential. Like exponential is happening already, and if that pattern continues, we are going to get some really big numbers. But it's like watching something that takes 4 years or 10 years in this time in human history feels like an eternity. It's almost like it's hard. Our attention spans are getting so compressed that it's getting hard for us to sort of observe things that take longer than, a 2-minute YouTube video.
I think you just gave me a brilliant idea. I had to write it down. I might turn that into a video, but you're 100% right. Bitcoin adoption is already exponential. So everybody's looking at the US dollar denominated price of Bitcoin. That's a wrong way to measure it. You need to be looking at the market cap. And like you say, so I'm going to turn this into a video anyway, but what I'm going to do is look at the market cap gain in each Bitcoin bull market, because I think it's actually growing exponentially. And everybody's saying, Bitcoin's seen diminishing returns. In the 2013 Bitcoin bull market, the first one after the first halving, we saw 100x. Then after the 2016 halving, we saw a 33x. Then after the 2020 halving, we saw a 4x. And everybody's like, so easy to predict where Bitcoin's going to go next time. We're seeing this declining growth of Bitcoin every bull market. I think that's an absolute myth. I've been very loud about diminishing returns since 2021. Now it's becoming a little bit more popular to say, these models and cycles, they're going to be broken. But I've been screaming this from the rooftop in 2021. And I think that all of that's going to be broken. And I think, like you say, we already have the data to show that Bitcoin is being adopted exponentially when you run the numbers, having a look at the market cap gain. So that kind of, what was Bitcoin market cap? About $100 billion, maybe when it was about $3,000 a coin. Again, live math's not perfect, but now it's at like 1.3 trillion. That's an increase by like 13x. And I think when you run the numbers, that kind of adoption, comparing that to previous cycles, that will look exponential, which is fascinating way to frame it.
I love that you brought up the diminishing returns idea. It's something that hasn't come up on the podcast yet. And it's another one that I also kind of think is a very mid idea. Like it's just, the idea that things are going to, one, it's a super pessimistic view. And I think like there's people who believe that every 4-year Bitcoin cycle, the percentage increase that Bitcoin price happens, they believe that that's going to drop. Those people are going to be selling very early in this next cycle because they're going to be worried about something that first of all, nobody knows what Bitcoin is going to do. But I think that exponential adoption technology curve, it looks like an S when you plot it out, right? So that there is a spot where when something's first happening, you go from 0 users to 1,000. Well, that's a massive percentage growth on a percentage compared to moving from the 1,000 to 2,000. You've only doubled your users. But then again, the slope trends upwards again. When we move from 10% adoption to 90% of the race, now we're talking about going from 80 million people to 8 billion people. And that's where I think that people are a little bit of looking at the trees instead of the forest.
Yeah, I 100% agree. I think like if this is the first episode, you're talking about these ideas of diminishing returns. I think it's brilliant. Let's knock it out of the park. I think that all of these models are absolutely ridiculous. So firstly, they assume that the rate of adoption for Bitcoin is going to remain linear. They assume, okay, the market cap for Bitcoin is getting so big that you need an exponentially larger amount of capital to come in and adopt Bitcoin to break these declining returns that we see every bull market. And they just assume the adoption is going to remain linear into the future, which is ridiculous. Bitcoin's been adopted by 0.5% of society as a store of value. 0.5% of the world has put half of their savings into Bitcoin. So these people who propagate these models assume that the adoption rate is going to remain steady for the next 20 or 30 years. So they're making the assumption that Bitcoin adoption in 15 years' time is going to be 1%, because they assume, okay, 0.5% adoption after 15 years. Let's extrapolate that data out. Again, it's ridiculous. It doesn't make any sense. That's the first massive flaw in all of these models. The second big massive flaw in all of these models is they assume that the same amount of supply is going to be available in the next 15 years. So in the first 15 years, we've had 90% of the amount of Bitcoin mined, and we've had this era where the amount of Bitcoin on exchanges only grew. So there's a lot of supply for anyone to buy it, right? But now we're in this era where in the next 15 years, only like 8% of the Bitcoin supply is going to be mined. And already on the exchanges, like we talked about earlier, we're seeing a supply suffocation, a supply shock. So I think they're like two massive areas that all of these models of diminishing returns and all of your TA gurus like Gareth Soloway, all of these clowns, they all get that wrong because they're just looking at the price of Bitcoin with this very narrow framework. They're not looking at all of these other things that you have to look at when you're analyzing a new transformative technology that's been bootstrapped and adopted by society.
Yeah, there's sort of 2 points that make me think of there. One, a sailor mentioned in Madeira that by 2034, the available Bitcoin that will have been mined by then is like over 99%. So we're sort of 10 years away from there basically being no new Bitcoin forever. So that's going to be something that evolves over this remainder of this epoch. And the other one is that I think, to add as a third point to your first two, is that I think that during the first 10 years for sure, I would even stretch it out to now, for a lot of people, dissatisfaction with how their local money was really not a prevalent thing. So during the 2010s, people in Canada, the UK, Australia, the Eurozone, money was still working fairly well at that time. And you didn't see ordinary people getting home from a shift from work and sitting in their car crying because they are working 60 hours a week and they can't afford groceries. And this is something that's now happening. This is a new phenomenon that is happening all over the Western world. And it's because they broke the money. And so what Bitcoin also has now is this new tailwind, I think, of an entire crop of people who maybe don't realize that Bitcoin's the solution yet, but they do understand that there is a big problem with how money works.
Yeah, so two brilliant ideas. So the first one about Michael Saylor and this 10-year digital gold rush. That was such a brilliant idea at the Madeira conference that I rushed home the next day and quickly slapped a video together on it because it's such a brilliant idea. I wanted to be the first person to make a video on it. And it's a phenomenal idea. He's saying the quiet parts out loud. He's telling you by November 2034, 99% of the Bitcoin would have been mined. And he's calling it a digital gold rush. What that means, what that translates to is we are going to buy all of the Bitcoin by November 2034. After November 2034, the billionaires would have had their stack and the rest of the plebs around the world are going to be fighting for the scraps. Again, you can use your own imagination of what a digital gold rush looks like, but he's telling you very clearly the billionaires are coming, they're rushing to adopt digital gold. Bitcoin is so much more than that, but they're rushing to adopt it. And like if you just look at the amount of Bitcoin on exchanges today, 1.8 million, there's only enough Bitcoin for another 8 Michael Saylors to go out there and buy 210,000 coins like he's done. Okay, that's what a gold rush is looking like. So again, Michael Saylor is essentially saying the same thing that we're talking about. Okay, my projection sounds a little bit crazy because it has that exponential number attached to it, $64 million per coin. But Michael Saylor is saying the exact same thing. We're in a digital gold rush. The billionaires are coming to buy all of the Bitcoin. What does that look like? What is the price tag per Bitcoin? If we see that gold rush, maybe we can get into the maths later, but there was something else really very interesting you kind of raised there. And that's the kind of fact that right now we have the need for money. This is also something that's kind of factored into my framework for $64 million Bitcoin by 2030. It's not just looking at Bitcoin from it being a technological revolution, but I'm also looking at, how rapidly our macro world around us is evolving. So we're in the very conclusion of one of these 90-year fourth turning cycles. Every single 90 years throughout history, for the past 500 years, we've seen an era of crisis, and it's typically called like a fourth turning. So a 22-year window of crisis and conflict. And we're in that. We're in the very later stages of that. So that began in 2008, and that's scheduled to end in 2030. Again, very interesting timing. We're also at the conclusion of this, 80-year long-term debt cycle. Every 80 years, when governments get over-leveraged and they have too much debt, they have to essentially default on their debt. And they always choose to print a shit ton of money and inflate away the value of that money and pay back their debt with the devalued dollars. We're again going through that for the first time in 80 years. And all of this crying on the street that we're seeing from the everyday people is a recognition that this cycle is happening again. So people don't really feel the pain of inflation and wealth inequality until it's too late, and until we're, most of the way through this kind of fourth turning cycle, and we're most of the way through this deleveraging cycle with the government debt issue we're seeing today. And that is what the everyday person is seeing. They all of a sudden can't afford housing, they can't afford food, they can't afford healthcare, they can't afford tuition. And that is because right now the money is getting broken at such a rapid rate. So I think we're kind of like, Lynn Alden's done some really interesting work looking at these, long-term debt cycles. And typically it takes about 10 to 15 years for a government to actually deal with its debt. So there's also a study done by Hirschman Capital, and they showed that since the year 1800, 52 countries have reached government debt levels of 130% and higher. And 51 of those countries ended up defaulting on that debt within 15 years of reaching that 130% debt to GDP ratio. Now, again, this is kind of factored into my thesis for $64 million Bitcoin, but America, the global reserve currency holder, hit that 130% debt to GDP ratio in, surprise, surprise, 2020. So we have a 98.6% probability that America is going to default on its debt in the next 15 years. Again, you guys listening, what does it look like if America defaults on its debt? They're not going to say, sorry, we're just going to default. They're going to print the difference. They're going to print money, devalue the money, pay back the debt with the devalued dollars. And all of this again is a massive advertisement for Bitcoin. The fourth turning, the wealth inequality we see in the world today, it's all a massive advertisement for Bitcoin. And we're just slowly beginning to see, like, for the first time in a long time, people are sick with the system. Like you say, all throughout the 2010s, there was this kind of belief that money was good, money worked, money was okay. I think if you look at the data, it was something like 20 to 30% of emerging market economies had inflation above 5% in the 2010s. Now it's 70 to 80% of emerging market economies have inflation above 5%. In my research of hyperinflationary events, typically trust is lost in the currency somewhere around 10 to 15%. So again, that's kind of like a very interesting data point. And then if you also look at the 2010s, something like it was less than 5% of advanced economies had inflation above 5% in the 2010s. So again, we were all under the impression that our money was working. When inflation is less than 5%, the government could steal from you for a very long time without you noticing that you're losing a significant chunk of your purchasing power. But then like post 2020, post that inflection point again, all of a sudden, I think more than half of advanced economies have inflation above 5%. And when you look at the actual real inflation numbers and not the cooked books the governments are using today, pretty much all advanced economies, maybe except for Japan, actually have CPI inflation at above 5%. So I think those are two fascinating points you bring up, and I 100% agree with both of them.
It makes me think about, you wrote an article a couple of weeks ago about this phenomenon when it played out the last time, and a very famous German investor named Hugo Steins. And Hugo Steins was somebody who saw what was happening with money printing and government debt sort of at the turn of the last century in the early 1900s, and started borrowing paper debt to buy real assets. He was buying gold, he was buying businesses, tangible things, buying lots of real estate. And you would know the stats better than I do, but maybe tell us a little bit about Hugo Steins and the trade he managed to pull off.
Yeah, so he essentially was probably known as the greatest economic trader for the past 100 years. I think a lot of people wrongly associate with this title with someone like Warren Buffett. Or let's say a lot of people talk about the trade of, is it George Soros when he broke the British pound and he made $1 billion on that trade? A lot of people talk about those trades, but I think that Hugo Steins, his trade in the 1920s was far, far better. So what Hugo did was in 1920, Hugo was just a business owner. So I think he just owned a family business. It was a coal business. And his family was like moderately wealthy. So he was just a player, really. He was maybe in the top 5% of society. He was doing well. He had a family-owned business. But he could see that inflation was picking up. And his base case was that we would actually see very significant inflation. So what he did was he borrowed as much money as he could in the depreciating German mark. And what he did was he went out there and he bought hard assets. So he bought gold, he bought real estate, and he bought more businesses. And he just continued to do this all throughout the hyperinflation. And he would just essentially wait for the currency to lose all its value. And then he would pay back his debt with like the hyperinflated dollars. And by the end of that hyperinflation in 1924, I think was when he died. But he died as essentially Germany's richest man. So in only 4 years, he'd gone from being like a moderately wealthy, business owner to owning more than 15% of all of the companies in Germany. And he was Germany's richest man. And he just essentially borrowed he took out debt in the weak currency, and he just bought, real cash flowing businesses, and obviously real estate, and obviously gold. So I think Michael Saylor is the modern incarnation of Hugo Steins. And it's almost poetic as well. It's really strange because this happened between 1920 and 1924. Michael Saylor began buying Bitcoin and taking out debt to buy Bitcoin in 2020, exactly 100 years after Hugo Steins began doing it in Germany in 1920. So again, I just think that's a cute little poetic similarity. I'm not saying we're living through this German hyperinflation. I do think we're living through it, but probably in the earlier stages than it was in Germany in 1920. But I think Michael Saylor is doing the same thing as Hugo Steins, but I think he's taking an even better approach. And I think instead of, Michael Saylor just having the potential of being the richest man in his country, I think Michael Saylor is taking an approach that has a potential of him becoming the world's richest man, which is fascinating because he's not buying businesses or real estate. What he's doing is he's buying the best solution to the problem, and that is Bitcoin. If we are living through this kind of hyperinflationary event, whether you think that's going to take 50 years or 5 years, right? Michael Saylor is buying the best possible solution. He's buying Bitcoin, which is it's a fascinating story, and it's one that I enjoyed researching the history of that one for the video I made on it.
It's an absolutely fascinating story, and Saylor is surely a student of history. Like when he gives interviews, he's studied on lots of topics, but I'm sure that the Hugo story was the inspiration for his strategy. I'm not sure if he's ever sort of openly acknowledged that, but yeah, I mean, I definitely think he's going to be the richest man in the world. He personally owns, I think, something around 18,000, 20,000 Bitcoin himself. And I'm sure there are some really big Bitcoin whales, but if you combine that with his holdings in MicroStrategy, even just getting 20,000 Bitcoin as an individual for someone like Elon Musk or Jeff Bezos, like that's still a lot of money, to make a purchase that size, to get liquid enough to make a purchase that size and be able to make it without moving the market. Because if you start buying Bitcoin at that kind of volume when there's only a certain amount that's available for sale, it's going to do this thing that you've mentioned, sort of price multiplier effect. Maybe if you want to just explain what the multiplier is and how it works.
Yeah, great question. So essentially, most people agree that not all the Bitcoin are available for sale, right? Everybody agrees that. I think the data says that in the past 3 years, something like 60% of the Bitcoin hasn't moved in the past 3 years, which again is a wild statistic. In that time, Bitcoins ran from $10,000 to $65,000, back down to $30,000, back up to $69,000, back down to $15,000, back up to $74,000. And 40% of the Bitcoin networks just said, yawn, wake me up when it's at $1 million. Wild to think about. But so everybody agrees that not all the Bitcoin's available for sale. Yet when every single math calculation I've seen until maybe 2024. Again, I wrote this paper in 2021 when I think I might have been the first person to ever call it the Bitcoin multiplier effect, because I found this model on Willy Woo's website, and it's called the market cap gain per dollar invested in Bitcoin network model. That's the long name of the model on Willy Woo's website. So I said, let's just call this what it is, the Bitcoin multiplier effect. And what he's tracking is the amount of dollars coming into Bitcoin it takes to push Bitcoin's market cap up by X percentage. Because this is the biggest thing most people don't consider when they say, okay, gold has a $12 trillion market cap. If $12 trillion flows into Bitcoin, that means the price of Bitcoin is going to be X. And they never, ever, ever factor in they never factor into the equation the fact that not all the 21 million Bitcoin are available for sale. So when you do your maths calculations, you have to use the Bitcoin multiplier effect. So if you look at Willy Woo's model, essentially it obviously fluctuates, the Bitcoin multiplier effect, but he uses a nice kind of 2-year moving average of what this data is, based upon on-chain data, which is why I always use Willy Woo's model, because it's actually rooted in data, not just speculation. There's lots of people speculating that the Bitcoin multiplier effect today is like 118x, because that's what Bank of America said. Okay, that's cool. And I'm bullish than most people. And don't get me wrong, I could make some phenomenally bullish videos saying the multiplier effect is 118x because Bank of America said so, right? But the reason I don't use that because it's not the truth. When you have a look at when Bank of America mentioned the fact that the multiplier effect was 118x, they mentioned it in a report that was titled Bitcoin is dirty, slow, and too volatile to be money. And what Bank of America did was they looked at the price action of Bitcoin in a 12-hour window on an afternoon. So I think they looked at a specific day when Elon Musk said he was announced to be buying Bitcoin, it was back in 2021, and Bitcoin jumped 10%, and Bank of America said, oh, look, only $1 billion flowed into Bitcoin on this day, and it moved the market cap by X. This means Bitcoin is too volatile to be money. That's their exact words. And I think it's silly to be looking at daily timeframes for the multiplier effect, because obviously when the world's richest man announces he's buying Bitcoin, there's nobody selling Bitcoin. So of course everybody's buying Bitcoin on the day, and the multiplier effect essentially can go to infinity. So again, that's a little bit of a tangent. I get triggered by discussions about the multiplier effect that aren't rooted in data. So the data shows you that today the Bitcoin multiplier effect is 4.5x. So what that means is if for every $1 that flows into Bitcoin, pushes the market cap up by about 4.5x. And if you have a look at the model, it's hit that level of 4.5x twice in its history. So again, before 2020, the multiplier effect never got above 4. Again, we got that inflection point. But now, because we're living in this era of Bitcoin undergoing a supply suffocation, in the 2022 Bitcoin bull market, that multiplier effect hit about 4.5. And today it's back up at that level, 4.5. Again, I use that exact multiplier effect and on-chain data in any of the calculations and future quote unquote projections that I use when I'm looking at the price of Bitcoin.
Well, so maybe we've arrived at a place where we might be ready to unveil how you arrive at this target of 64 million per Bitcoin by 2030. Wizard of Oz, pull it back.
So it's funny, when I ran the numbers in 2021, I said, it's funny because I said, okay, let's be conservative. And let's say half the world's wealth wants to flow into Bitcoin. So $900 trillion. And again, I'm remind people, run your own calculations. If you don't believe that half of the world's value wants to flow into Bitcoin, say 10%, run your numbers, but just use the multiplier effect. So the maths I did was, okay, I think half of the world's wealth can flow into Bitcoin. That's 450 trillion. At the time when I was using the multiplier effect, it was only at 3x. So I used 3x multiplier effect, and I don't remember the exact market cap level, but then you get a market cap of X, and then you can divide that by 21 million because you've used the multiplier effect. You've accounted for the fact that not all 21 million Bitcoin are available for sale. You get that market cap divided by 21 million, and it gives you a price tag of $64 million per Bitcoin. But since then, since I ran those numbers, the multiplier effect is no longer 3x. It's actually much higher. It's actually at like 4.5x. So again, in that article, I said, let's be conservative. Let's use an average of the past 5 years worth of data. Because at the time, I'd never seen anyone use the multiplier effect. So I said, hey, here's this new model Willy Woo has. I think let's call it the multiplier effect, but let's be conservative. Let's just use the past 5 years of data. So if I were to run the same numbers today and look at the past 5 years of data, the average multiplier effect's like 4, maybe 4.5. So all of a sudden, those numbers are actually even more bullish if I assume that half of the world's wealth can flow into Bitcoin. Now, again, there should be a caveat there. I think it's a good caveat to make. And it's also a caveat I did make in 2021 when I wrote about it. You can't just assume that if 80% of the real estate market wants to liquidate itself and get out of real estate and flow into Bitcoin, that you're going to actually be able to get $300 trillion out of the real estate market. So I think today global real estate's like 350 trillion. And I ran the numbers looking at the long-term average price to income cost of a home. And I was able to kind of determine in that article, I said, look, I think about 300 trillion of that 350 trillion is an excess monetary premium based upon the long-term data of what a home normally costs. So I said, what does it look like if 300 trillion of that money, that's again, only in real estate, because if it's in there for a monetary premium, well, Bitcoin's the best monetary asset in history. Of course, you want to hold Bitcoin instead of real estate. So what does it look like if that 300 trillion sucks out of the real estate market and flows into Bitcoin? So again, that was the assumption I made looking at each asset class around the world. There's $300 trillion of debt. There's a couple $100 trillion of fiat. There's bond markets. There's gold, all of that. So I ran the numbers and I said, it makes sense that about 450 or half of the world's wealth should flow to Bitcoin. So again, run your own numbers, but a valid critique of that exact framework is the real estate market's probably not liquid enough for you to be able to sell $300 trillion and get $300 trillion out of that market. Obviously, when people begin to liquidate real estate in size, market cap drops and it gets lower in kind of like an exponential fashion. So again, there's some caveats there, but that's the maths for why Bitcoin can reach that price. And a massive misconception about that maths is that's based upon $900 trillion in the world today. That's not talking about hyperinflation. So the way I frame it in that article was, let's look at it in purchasing power terms. So a pristine mansion on the coast of California costs about $10 million. Give it, más o menos, more or less. So that means that the way I look at it is if Bitcoin's at $65 million a coin, should be able to buy you about 6.5 of those Malibu beach houses in California, which is probably one of the more expensive places in the world to buy real estate. So that's kind of like your mental operating model on how much a Bitcoin should actually be able to purchase in this world when it's priced appropriately. And I think most people are not bullish enough on Bitcoin because they think the end goal for Bitcoin is $1 million, and that buys them probably like an average size home where they live in maybe in America or Australia. But no. We're talking about pristine Malibu beach house mansions. You should be able to get about 6.5 of one of those for a Bitcoin by the end of this demonetization process.
Love it. And which brings me to sort of another one of your ideas, which I think is great to tack on, the notion that 0.1 Bitcoin would be potentially enough to be sort of generational wealth for yourself and your family. And that's another one I think that has a little bit of a unit bias. It's like, it's not even a whole one of these things and you think it's going to be that much money, but maybe just, tell us a little bit about 0.1 Bitcoin.
Yeah. So again, I think I talked about 0.1 Bitcoin way back in 2021. And when nobody thought it was cool to talk about, fractions of a Bitcoin and especially fractions of a Bitcoin being generational wealth. That was considered ludicrous back then in 2021. But so my mental operating model is the best case scenario we're operating under today as Bitcoiners is we can get 100 million families freed from fiat forever with 0.1 Bitcoin. So I think there's about 10 million Bitcoin actually available for sale when you run the numbers. And that means that under a best case scenario, we can get 0.1 Bitcoin into the hands of 100 million families. Obviously, that's not going to happen because some people like Michael Saylor hold a whole lot more than 0.1 Bitcoin. But yeah, that's the thesis. Like I think even very conservatively, I can see Bitcoin in the tens of millions of dollars per coin. I think even like 64 million and 100 million, that's like a little bit more speculative. People are going to think I'm crazy, but most Bitcoiners agree that, like Bitcoin can get to $1 million. I just think most people are too bearish. So like on the time frame of when it gets to that $1 million Bitcoin, based upon 12 years of really shitty models, like the diminishing returns model and all that other trash. But most people agree, okay, maybe 1 million, maybe 2 million, maybe $3 million of coins generational wealth, or it can be like a significant amount of wealth. And like even if Bitcoin's at say $5 million a coin, well, that means 0.1 Bitcoin is, what's that? Yeah, $500,000. Depending upon where you live in the world, that could be generational wealth. $500,000 in Argentina, Colombia, or many countries in Latin America, that's already generational wealth. But obviously, I'm talking about every country around the world. And I think, like we ran the numbers, when Bitcoin buys you 6.5 Malibu beach houses, that means a 0.1 Bitcoin can nearly buy you a massive mansion in the best possible place in the world. So again, I think 0.1 Bitcoin today, it's worth about, $6,200. And I think it's still a target accessible to most people around the world. Yes, there's probably some places around the world currently priced out of getting to 0.1 Bitcoin, especially considering the fact that I think things are going to get strange and exponential over the next few years. But yeah, that's essentially my thesis on 0.1 Bitcoin can be generational wealth. I think it's better to use the fractions because right now 1 Bitcoin is already out of the reach of most people. Like 80% of Americans can't afford a $400 emergency. So they can't afford $6,500 for 0.1 Bitcoin.
Yeah. And I think that, again, it's getting back to this idea of trying to put in place how big the use case this thing is. And to maybe finish with one more Michael Saylor idea, we're going full Saylor today. See how Saylor talks about the use case really is to give people access to a tool where they can store their monetary energy. And I think that we don't tend to think of the prices of desirable assets today as having a premium built in because of the use case of storing energy. So, real estate in Canada is a great example. Price appreciation has been astronomical over the last 20 or 30 years, but our currency also expands at more than 8% per year. So there's double the amount of available money every 10 years. So of course, people are going to be looking for ways to protect the energy of that money as the money itself loses energy. And so as all monies start to become weaker and weaker and poorer stores of energy, there's going to be more people hunting for places where money is going to be safe. And if one thing starts to really take a lead in terms of people's ideas around the safest place to store your monetary energy, then that idea on its own becomes something that generates its own inertia. And as one person understands it, 2, then 4, then 6. And this is how we get to this massive use case of just being the best possible place to store your monetary energy.
I think it's a great way to frame it, and something not everyone factors into their equations, the cost of storing energy.
Big idea. We'll have to have a part 2. Luke, this has been so much fun, man. Thanks for coming on, and love to have you back again sometime.
Anytime, dude. Thanks for having me. It was a blast.
Cool. And if you're listening and you made it all the way to the end of the episode, I want to thank you for your attention. Your attention is currency, and I appreciate you tuning in. Our goal is to create Bitcoin content that's accessible, informative, and engaging. And please like, subscribe, comment, and come back next week for another episode of The Block Reward. Thanks for listening to this episode of The Block Reward. We're trying to do something different here, creating accessible conversations meant for people who aren't obsessed with Bitcoin. If you found this episode informative and engaging, hit that subscribe button to make sure you stay updated with future episodes. Your feedback matters. We'd greatly appreciate it if you could take a moment to share your reviews and help us with our goal of creating Bitcoin content that is simple and easy to understand. Bitcoin has an important role to play in the future of finance. It will change the way we save, spend, and invest. Discover why Bitcoin offers a game-changing opportunity for forward-thinking employers by visiting blockrewards.ca. Block Rewards' mission is helping Canadian employers implement strategies for integrating Bitcoin into compensation and benefits, supercharge your recruitment and retention strategies, and help your team members plan for the rising cost of living by rewarding their work with the hardest money ever invented. Special thanks to our top sponsor, Paramount Employee Benefits Consulting, Canada's only Bitcoin forward benefits and pension advisory. For more information, find them at paramountbenefits.ca. Big shout out to Podigy, our production team that makes all this possible, and BMX Escape for producing our music. Bitcoin is an expansive and dense topic many people walk away from early. To Bitcoin enthusiasts looking for that podcast they can share with friends, family, and colleagues, one they'll actually listen to, we hope that is us. The content of these conversations is meant to be provided for information purposes only. Nothing here is investment advice. Bitcoin is a big topic. Be sure to do your own research before making any personal financial decisions. Thanks for listening.